I think are important. After I'm done, I'll go through and make sure all of you have the fold-outs in your little thing there. Then Al is going to come up and talk to you probably for 20 minutes or so, wills and trusts and everything else that he feels is important. So continue reading, it doesn't bother me a bit. So. First of all, benefit night is actually for members and non-members. For the members, it kind of refreshes them on what they have, what's available to them through the insurance program. And also new nights kind of gives them an idea of what they could look forward to if they decide to become a member. This council here does an extremely well job of recruiting, so that's always been the least of my worries because they're very active up here. So it's a great council. So I'm ready to get going here at any time. If you can't hear me, especially in the back, kind of do something and let me know, okay? First of all, what is the Knights of Columbus? Knights of Columbus was founded by a Catholic priest to support our Catholic faith. This goes back to 1882. Father McGivney, which is now Venerable Father McGivney, soon to be Saint Father McGivney. These guys need saints to pray to, so we're pushing that program pretty strongly. So, back in that time, Catholics, for lack of a better word, weren't really liked. We got the worst paid, we got the worst jobs, and if the wife, spouse died, I'm sorry, if the member died, or the man, she had no access to any life insurance. She was just kind of booted out saying, you're on your own, take care of yourself and your children. So Father McGivney, being a young priest in his 30s, said this isn't right. We need to protect the widows and the orphans. And you'll probably hear me say throughout this presentation, that is my job, protection. Nothing else matters as much as protecting families. So you got a group of men together, and in your little packet there, St. Mary's, took them down the basement, and they, lo and behold, came up with the Knights of Columbus. So we can take care of the widows and orphans. Knights of Columbus, what makes us different from the rest of the insurance companies out there? Carl Anderson, our Supreme Knight. Basically, we don't take a lot of risk. We're pretty conservative. And we don't get into the risky stuff because we don't understand it. We actually do not get involved in it because we understand the risk. So we are more of a conservative side of that. Being Catholics, of course, these are things that we don't participate in. Embryonic stem cell research, human cloning, pornography, abortion, contraception, and for-profit health care. We are AM Best superior rating on the insurance side, and there's your most important asset right there, your family. We all have insurance on something that we own. We've got car insurance, we've got health and life insurance on your family. We've got, if you have wealth, more life insurance, a house, homeowner's insurance, your salary, disability income. If you get hurt on the job, where's your next paycheck coming from? It's kind of interesting. What are the odds of you filing a claim? Now with me for the last year, the automobile business and the insurance side was very happy for me. So things happen. Fire insurance. odds are 1,200 to 1 that you're going to make a claim for fire. Your auto liability insurance, 250 to 1 that you're going to make a claim on your automobile. Term life insurance, 49 to 1 chance you're going to file for term life insurance. Why? Because most people outlive term insurance. Permanent life insurance, just what it says. It's there till you die. Long-term care and disability income. Long-term care is 2.5 to 1. Disability income, get hurt, can't work, 3.33 to 1. So you can see that people don't plan to fail. People fail to plan. You need to balance your financial life. The greatest transfer of wealth is about to take place in your estate planning. Having a will is imperative, and Al's going to go over a lot of this stuff. Was much more knowledgeable on wills and trusts. But if you have a will, great. You should also look into having a trust, something that will take over and take care of what you have left behind. For example, if you and your spouse pass away and you have children. Maximize transfer of assets to loved ones and not to taxes. Understand lawyer fees, accounting fees, probate fees, and time involved. And I'm sure Al's going to cover this area right here. And charitable giving. We all have a charity, or most of us do, that we want to leave something behind. Money to live and money to leave. Ways to help estate planning? Of course, life insurance. You need to invest money with insurance companies to save time and money. Have a will and power of attorney completer. Whenever possible, have a contingent beneficiary. Ask yourself this question. When was the last time that you looked on your policies, on your life insurance, whether it was nice or not? What's the last time you looked to see if that beneficiary, if something happens to you, that next person in line is still your friend, still is alive, still is your wife, girlfriend, whatever the case may be. Most people, they buy insurance, they put it away, and they don't look at it very much. It's just there, they know it's there, but they don't review it. You need to review your life insurance. So, very important that you see if your beneficiaries are intact. If you're with Knights of Columbus, it's a 10-minute change to fix that. If you're with another company, get a hold of them, but just get it fixed, okay? Because you don't want to all of a sudden have, when you're gone, now the little mini war starts between who's getting the money and no, you're not supposed to have it, I'm supposed to have it. Have a detailed list of all assets and inform beneficiary or someone trusted where it could be found in the event of death. That primary person that's going to take care of your funeral when you die has to be someone that you trust and you know is going to take care of business. That's why I don't have people under 18 be a beneficiary. What happens when you hand a 17-year-old a check for $250,000? Hopefully he'll take some of that and bury you, but what's going to happen with the rest? You need to have an adult, someone that thinks like an adult, to be there to take care of business for you. Choose an executor carefully. What are your wishes when you're alive and when you die? And long-term care insurance. How many in here have taken care of someone where they've had to take time off from work or have had to go to their homes and take care of them because no one else is available? Most of us do. It's a very time-consuming, as much as you love them, it's a very time-consuming thing to do. Can you afford to leave your job? It's a very stressful situation. So something you need to look into right there, long-term care. Who would you prefer to get your money from the following list? Probably all would like this one right here. Government, lawyers, accountants, or children or grandchildren. Odds are, that's where you want to have your money right there. Right there, lawyers on there, I always like to follow that up with, you need to have a good lawyer. You should have a good lawyer, which Al is. It's good to have someone that guides you in a lot of these things that you need to take care of. That's very important. Your favorite charity. We'd much rather give to Right to Life, your church, something like that, than to give it to the government. Money with an insurance institution does not become public record and cannot be contested and is tax-free. Al said that was a picture of him when he was younger. I don't think.
About a week ago.
I got a question. Although I have seen him in that position. There's no higher rated insurer in North America than Knights of Columbus. We're in the Fortune 1000. Most people don't even realize we're in the business. I became a Knight in 07, had no idea the Knights of Columbus had life insurance. Lo and behold, I'm working for them 2 years later. We are a nonprofit organization that donates 16% of revenues to charitable organizations. We are tax exempt. At least 84% of profits to be given back to the Brother Knights in form of dividends. Now, the Knights don't guarantee dividends, but we've always paid them. That's why when you get those statements every year, you see that death benefit going up. This is excess money that the Knights give back to their policyholders. Not all companies are involved in giving dividends. So, of course, Knights of Columbus financial programs are run by Brother Knights for Brother Knights. Life insurance, term and permanent. And I'll explain the difference here. Term insurance is called temporary insurance, renting insurance. I always tell members when I meet with them, you should have a combination of whole life and term. There is a point when you're starting out and you get that home, and you make a little bit more money and you buy that boat, then you get that Sea-Doo, then you get that camper trailer, and you start to run up the debt. Term insurance will cover a large amount of insurance at a smaller price. Why? Because what you buy is what you get. There's no cash value to it. There's no dividends paid on it. But still a very good thing to have. You can get it in 10, 15, and 20 years. And it does just what it says. It solves temporary needs for insurance, covering your mortgage and replacing your income. The cost is low at first and goes up with time. Why is that? Let's say, for example, you get a 10-year term. At the end of 10 years, guess what? It takes a pretty healthy jump. You're a year older, okay? With that whole life insurance, whatever your premium is when you start, that never changes. That always stays the same. But term will go up as this changes right here. So at the end of 10 years, you get your next statement and what you were paying. This is a fictitious number, but you were paying $300 a year, now you're paying $1,200 a year. Okay. And term insurance is actually designed to expire before you do. Most people will outlive their term insurance. Permanent insurance, which is In other words, whole life insurance. It's just what it says. Whole life insurance. Higher cost at first, cheapest in the long run, which I just explained to you what term insurance does. Permanent insurance has a living and a death benefit too. With permanent insurance, you gain cash value. Many people will borrow on that money. It's not if you die, but when you die. You control it. And just like I said earlier, a good life insurance portfolio usually includes both the term and the permanent insurance. Remember, if you buy that permanent and term insurance at the same time, you're buying it at that current age. Get it when you're young and healthy. I preach this to young people all the time. There's no better time to buy than when you're young and healthy. In review, that's why we try to see everybody once a year, which is sometimes a pretty difficult thing to do, but things change. When someone first sees you, you were single, so you bought a death benefit. Now all of a sudden 2 years go by, you now have a home, a wife, and a child or two. That's why it's always good to review your life insurance. And obviously we are older than you are. So. Beware of this, life term and invested difference. Our term insurance is convertible. In other words, down the road, if you want to take a chunk of your term and make it a permanent policy, you can do that without showing any insurability. Our term insurance now, a year or so ago, is what they call an accelerator program. So if you buy life insurance for the first 6 years, if you decide to, it will increase, I believe it's 5% each year, okay? So you're adding more life insurance at a minimal premium, but you're not showing any insurability. So they're actually giving you more life insurance no matter what your health is, at a small premium. Of course, that right there, there should be no pressure into buying something. Can anybody see that okay? Disability income insurance, what they call income armor. Protect your most valuable asset, which we know what that is. Your ability to work and earn an income is your greatest asset. Income is the foundation of your family's financial plan. When you stop getting a paycheck, all those people you owe money to, not going to matter to them. They're still going to want their money. Disability can and does happen when you least expect it. Income stops and expenses increase at the disability strikes. Those bills will keep on coming. There's no acceptable alternatives to disability income policy for protecting income. Perception in reality. According to the Council for Disability Awareness, 90% of workers grossly underestimate the chance of becoming disabled and the potential length of disability. How many people go to work assuming they're going to get hurt? Perception compared to reality. Perception. Most disabilities are caused by accidents. 90% of disabilities are not accident-related. Perception. Most disabilities are work-related. Reality, only 10% of disabilities are work-related. Perception. 58% of adults say they are covered by disability insurance. Reality, only around 30% have long-term protection. 3 out of 10 workers between the ages of 25 and 65 will experience a long-term disability.
6 months of disability can destroy 10 years of savings. 4 leading causes for disability claims: bone and muscle disorders, cancer, cardiovascular and circulatory, and obesity and health issues. You stop and think about it, as the medical field has increased in their knowledge, people that normally would have died are now living longer because they can be treated. True or false? I am prepared to sell my home in the event of financial difficulty. I do hear that sometimes, but if you drive around enough, you'll notice these houses have been up for sale for a year. Don't always assume that you can sell your house as quick as you think you can. If I were disabled, I know the government would care for me. I don't know if I want that kind of care or not. I have no expensive hobbies. That's true for some. My children will not need my financial help for their education. Another true or false. I can afford to take a 2-year unpaid vacation. If you answer false to any, you should be thinking about disability insurance. Our annuities: no upfront sales charge or annual fee. Annual fee withdraws 10% of account balance per year. I'll read all of them. Competitive with CDs. Principal and interest 100% guaranteed by the Knights of Columbus. Will never go down in accumulation value. Understand how each vehicle can be used to maximize return and maximize tax liability. Beware of the pros and cons of everything you look at. Adjust your portfolio according to your needs, risk, and tolerance, and goals. This goes back to the point, review your stuff every year if you can. Every person is different. Sit with someone to go over with you. Don't lose sleep over your financial goal. Just keep an eye on it. Time for smooth sailing. We have a way to help you sleep better at night. Guarantee safety, we guarantee your principal and a maximum or minimum rate of interest. No tax on gain each year. Tax is deferred until the funds are withdrawn. Flexibility and choice. Add only ones who make periodical contributions for as much as you want, for as long as you want. And when you want to begin receiving annuity income, you can choose from a variety of payment options. You can guarantee an income for life. It can be used for traditional and Roth IRAs, 401 pension plan rollovers, an alternative to low interest CDs. I'm not sure what CDs are paying right now, but I don't think it's worth that. Are there any transfer administration fees? Are there surrender charges and how long are the terms? What guarantees you get it right? What are the management expense ratios? Can I withdraw early and are there limits? Am I locked in and how long? And what happens if I want to cash out? What happens in case of death? Is your bank looking out for your best interest? Tough times, it's more important to make the right decision. Knights of Columbus care long term. The grain of America. Every 8 seconds, someone turns 50 years old. Currently, more than 35 million people over the age of 65 in the U.S. The number of people age 65 is increasing 2.5 times faster than the overall population. 43% of those currently turning 65 will need long-term care services at some point in their life. And nobody's exempt from it. Would you like to remain at home, have choices, control your assets? Along with that, some dignity. Does your retirement plan have serious holes in it? Your lifestyle, savings, IRA, 401ks, home equity, the need for care without long-term care insurance can drain your assets and your money. Right now, I use the figure of $6,000 a month, probably a little bit more now, $75,000, $80,000 a year for in-home care. Or actually for facility in home care. Who's protecting the retirement portfolio? And we will have a guarantee that your income will provide your expenses during retirement. That's pretty much it. I tried to skip by some of the stuff because most of you here have seen it over and over. Really, I just want to stress what's available to you. If you have your little booklets there, I just want to make sure everybody's got what they should have. This first one here, starting at the left side of your book, Making a Difference for Life. It just basically explains some of our insurance programs, what we offer. So when you get a chance, just kind of scan through it.
Yeah, I got it.
Next one is retirement annuities. Okay. Again, this is stuff you can take home and kind of read through, kind of get a general idea of what we offer. Along with that, your long-term care. Tells you a little bit about it. Should be this one right here. And the blue, disability income insurance. These booklets here will kind of give you a brief explanation of how they operate. And also we have, when we say guaranteed, we really mean it. Like this right here. There also should be a what happens to them when you no longer can care for yourselves. A little brochure like this. And the blue one here says why you should be an insured member. Just like this one here. How many are aware of some of their benefits? The life insurance you have as a freebie. It's actually not life insurance. It's accidental death. Okay. If you open up this one right here, you look on the inside. If you are a member for less than 2 years, both you and your spouse have a $1,000 accidental life. You need to know that's accidental. 2 years or less than 3, it goes up to 15. 3 years for less than 4, $2,000, and it maxes out if you're 4 years or more at $2,500. What happens then? Once you hit 65, it reduces $500 each birthday until it stabilizes back down to $1,000. So just keep in mind that is available as a freebie to you, okay? But keep in mind again, it is accidental death. Also on that, it tells about the Columbia, the Rosary programs, just a sentence or two on annuities, long-term care. How many new nights do we have here? Let's say less than a year. I don't think so. You all are pretty familiar, so. If you know someone that wants to be a knight or is considering it, and maybe put them in contact with your grand knight or whatever, and they want to know more about it, I put together little packets like this, and I'll tell them, this is what the Knights is about. This is what we do, this is what we offer. I'm not going to try to sell them anything. That's not the place to do it. Unless they say, hey, I got to have it, I want it. You can't actually purchase life insurance with the Knights 90 days before. You have 90 days to actually become a Knight. Okay? So you can't get it, but you have 90 days and you need to become a Knight at that point. So it is available. If you know somebody says, I need life insurance, I'm not having
any luck, or I'm thinking about being a knight, what do you offer? I'll show them that. But my intent is not to go in there and say, hey, I hear you want to be a knight, here's all the insurance you can buy, just write it up. That's not going to happen. So, if you need to have me stop and see them, absolutely. There's another thing here too, I kind of double stack. There's a, why do you need life insurance? There's little pull-out things here. Final expenses, emergency funds, educational funds, family income, mortgage protection. If you have children under 18, we offer youth policies, okay? You'd be at least 16 days old and under 18. With child policies, I'm a firm believer in child policies. You can get a minimum of $10,000 and up. I normally put it on a 20-pay life, so 20 years is paid for. But what it does is it gives them a good, solid insurance policy. How much cheaper can you buy insurance when you're rated less than 1 year old? It doesn't get any cheaper than that. And it also allows them, with a guaranteed purchase option rider, to purchase more insurance at certain intervals up to age 40. So they'll get these notices, hey, you're eligible for another $10,000, let's say that's what you bought. You can go up to a total of $100,000. So, and that's something, again, too, they're 20 years old and it's paid up. They never touch it again. Each year that's going to grow. Grow and grow and grow and grow and grow. But as the father or as the member, you own it. That changed, I can't remember what year, but it used to be at 18, kids automatically became the owners. It's not like that anymore. If you bought a policy for Cody when he was young, you own it for as long as you want to own it. So Cody can't cash it and go buy a truck. But that's the whole idea of it. You want to have the adult in control. I didn't mean to pick on anyone. That wasn't correct.
That's perfect.
Fraternal benefits. This one's kind of important. There are many children that the Knights of Columbus have insured that nobody will touch. For example, a $5,000 life insurance plan at a standard rate for members uninsurable or rated newborn, provided the application is made before the child is 61 days old. You get a $5,000 policy for an uninsured child between the ages of 60 days and 18. And up to $5,000 life insurance at a standard rate for mentally impaired children, otherwise in good health from 3 to 18. Many children out there that insurance companies will not touch. They will not take them under their wing. The Knights of Columbus will. The only thing is, either the mother or the father needs to have life insurance with the Knights of Columbus. So that is a great fraternal benefit, and a lot of children, and I know a number of them, have taken advantage of this. This goes into, this one right here is probably one of the most important things that you have in here. How many, and I went through this myself, but how many, if your spouse dies, knows where everything is? Do you know where all the policies are? Do you know who your lawyer is? Do you know where all your banking information is? Where your car insurance is, your life insurance is? All that stuff that somebody's going to want to know about when your spouse passes away. You need to sit down at times, sometimes, and say, listen, we need to talk about this. We need to talk about, number one, do we need a trust or we need a will? Do we need to get our stuff in order? Okay. If we die, does our beneficiary know what's going on, what he needs to do? Keep them informed. Fill this thing out, slip it in your dresser drawer, say, if something happens to me, there it is, pull it out, there's some information there. Because you just can't walk into a bank and say, hey, I'm the one taking care of this stuff unless you have some important documents with them. Banks aren't going to just open up their the information and give it to you, okay? So whoever your beneficiary is, or if it's stated in your trust, and again, Al will sure go over that, keep them informed on what's going on. Let them know where this stuff is, because that is the person, that beneficiary is the person that's going to make sure you have a proper burial. Okay? The check is going to them. When I come to a home, normally it would be a spouse, a husband or a wife. Okay? Contingent. That's where contingent is very important. What happens if they both are killed in a car at the same time? Okay? Who is that next person in line that'll take care of business? Having a primary beneficiary is very important, but having that backup contingent or stated in a will or a trust is very important to have. Okay? Don't leave the survivors in a fix where they don't know what they need to do, or are they doing the right thing. This one here, I won't elaborate too much on, but this is take control of your retirement. What is an annuity and how is it used? What's tax deferred important? What is an annuity? I still pay taxes on this money, right? I'll say if it's an annuity. Some good information in that there too. This one right here, basically because I ran out of business card, so I put it in. But this just gives a little bio of myself, something I had made up a couple of years ago. I guess my memory's pretty there too. But anyways, this kind of tells a little bit about me. That I am a brother knight. It's the only way I can hold this position is I have to be a knight. And then did you know, how many knows the Knights of Columbus is responsible for bringing the Holy Father to the United States via satellite and everything 3 times a year? A lot of people don't realize that. You watch EWTN. Anybody in here watch EWTN very much or are able to get it? You ever notice how many times it says brought to you by the Knights of Columbus, or the Knights of Columbus is involved in this? Then, of course, if you ever get to Connecticut, St. Mary's in New Haven is where it all started. Pretty interesting. I usually have cards with Venerable Father McGiving that I ran short because I'm doing 7 of these benefits in the next 3 months, so I ran a little bit short on those. So the most important thing I can tell you is take a look at what you have. Review your policies. See if you need to make changes. See if you're short on insurance. Check those beneficiaries out. Make sure that you have the proper people on there. If you have a lot of assets and you feel you need to talk to a lawyer, get some additional information, call Al. He's very knowledgeable. At least that's what he told me to tell you. So, and I've known Al a long time. He's a good guy. He'll steer you the right way. So with that in mind, I know I kind of rattled on here, but I wanted to keep it within a reasonable amount of time so you can get home. So other than that, I guess that's it. And then Al,